Hello, and welcome to another update video about ADA. Yeah, ADA is still holding here in the range. Okay, so obviously we talked about that in the last video already. ADA broke below the support area, but not on a sustained basis. We didn't even, yeah, okay, it held, I think, a couple of hours below that support level, but recovered immediately from 50 cents all the way up to 60, and then needed, I think, another hour or so to climb back into the range. It's not great, but I don't call that a sustained break of support. It is technically still a valid wave 4. I want to keep it as simple as possible. Other interpretations obviously are possible. For those of you who are interested, the yellow scenario anyway is still the preferred one, which means I'm still watching for one more high in this cycle, but that's probably it, I would say. Then there could be a chance for a really high B wave top. It doesn't even need to be super high actually, but I'm talking about a substantial top. So the idea is, obviously we had a low in circle A in June 23. This is an A wave, this is a B wave, and we're moving up in a C wave, right? And then that would be wave 1, wave 2, wave 3, wave 4, wave 5. It's steep, sorry, it's steep for a wave 4, but it is not it's not invalidated or anything. Even if it was invalidated, because the pullback is in 3 waves, we could still look for higher. Maybe the better way, and maybe I would change it at some point, but for now we'll leave it as it is. That's why I said, if you're interested, if you're a wave nerd like me, we can also call that, yes, a B wave, but the B wave can unfold as an ABC structure, but also as a slightly more complex pattern, the so-called WXY pattern. These are not typical patterns necessarily. Not too rare for a B wave either, but normally we're not gonna look for them, immediately. So as a first most probable scenario. So in this case, this would be a wave W, an X wave, and the Y wave. And the Y wave is 3 waves in wave A. So this here was an A wave top instead of a third wave. B wave can of course go lower than a waveform, so that kind of makes sense. And the C wave up. Which means we could see maybe an extended move up here, because a C wave would likely be longer than a 5th wave. But again, there's no right or wrong. It's essentially not making a great difference, because we could also call that something like an expanding diagonal, if that makes sense. That's just indicating the 5th wave could also be extended. So it doesn't make a great difference. It's just labels, right? For now, it's about understanding price action, and there's still a chance for higher prices. Pullback is corrective. And for more clarity, we need to take a look at the smaller time frame. The only thing is, if we get any more downside below this week's low, and the price recovered substantially from there, I mean, it was like 50% nearly. If we get any more downside, then it's likely going to test the lower support area, which was relevant already in August, September, in the region between 29 cents and 36 cents. Now let's take a look at the short-term ADA Cardano chart. Talking about short-term chart, because while the microstructure, the small recovery rate, okay, it was not a small recovery, but essentially we haven't really, there's still a lot of work to do, let's say it like that. There has been a reaction. The reaction isn't particularly clear in terms of microstructure, but that is not a surprise, because just imagine we have all this selling pressure. There's a lot of structure that we would normally see separately hidden in this sell-off candle and in the recovery candle. So there isn't really much to work with there in terms of structure, which might mean that the microstructure from the low isn't particularly clear. There is a possibility that this is a wave 1 to the upside, and we could start a wave 2 from here. And we've already seen the A wave, now the B wave, and then the C wave down. All I want to share with you, there is a micro support area here. This is basically the area that now needs to hold to keep upside, let's say, the potential for further upside from that Monday low intact. Support is between 56.7 and 68.2 cents. Actually, here on the short-term chart, I can delete the larger support area, because that doesn't really have any purpose anymore. It got broken, so it's not useful anymore. I would rather than use micro support areas like this one, because, well, we have a rally. This is just a standard set of Fibonacci levels, which would apply for a wave 2. I'm not even sure if this is a wave 2, but this is sort of the main set. Normally we say when the price breaks and sustains below the 78.6 Fib level, the upside reversal attempt has failed. Please note that the price hasn't even broken above resistance. Ideally, we want to see a break above 85 cents next. That's the resistance area. Next resistance level is then a structural one here around 99 cents, and above that, then we are back at the $1.16, $1.17 level, which we talked about last week as well. So for now, not much happening today, but it's about watching if the market can hold the 56.7 cent level now. And it looks a bit like, it would be nice to have a 3-wave pullback and then use that to start a 3rd wave rally from here. But as I said, any lower low will likely lead to a test of the larger support box on the daily chart, which was relevant in August and September. So there's still a lot of work to do. It really depends on maybe the next 24 hours to see how the pullback occurs, to get a bit of a better idea of the microstructure. That's the idea about the ADA chart. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.